So when you buy a commercial property, people often ask, what is DSCR? They keep asking that. Well, DSCR stands for Debt Service Coverage Ratio, which is the ratio of your net operating income, called NOI, to your annual debt service, called ADS. NOI is the income generated by the property after deducting operating expenses, but before paying taxes, interest, and depreciation. ADS is the total amount of principal and interest payments that you have to make on the loan each year. So the DSCR measures how much cash flow you have left over after paying your debt obligations. A higher DSCR means you have more cushion to cover your loan payments and unexpected expenses. A lower DSCR means you have less margin of safety and may struggle to meet your debt service. That's why they look at that coverage closely, and 1.0 is the absolute minimum that they'll work with. If you have any questions on if your building will qualify, please feel free to reach out to me.